Hello and welcome to another episode of Sand Hill Road, the show where I talk about early stage startups, venture capital, and technology. And today I'm really excited to be joined by Joseph Jacks, who's the founder and general partner of OSS Capital, which is a venture capital firm which has a thesis specifically around commercial open source software companies. And unless you've been living under a rock, you must know that COSS companies are on fire. Last year, they've been killing it with $4 billion exits, GitHub, $7.5 billion exit to Microsoft, MuleSoft exiting for a second time to Salesforce, SUSE, Magento. So this space has really been on fire. But interestingly enough, until now, you didn't have a venture capital firm which was really specifically focusing on open source software projects. Obviously, you had traditional VC funds like A16Z and Benchmark investing heavily in this space, but until now, you didn't have a dedicated firm that was exclusively investing in commercial open source software. And that's why I'm so excited to be joined by Joseph Jacks. So let's dig right in. We're here with Joseph Jack, who's the founder and general partner at OSS Capital, which is a venture firm with a specific focus on commercial open source software, COSS. And maybe let's take a step back and let's have Joseph give us a little bit of his hero journey. How did you get into this? You were deeply involved in the open source community. And how do you get from an operator and founder on the venture capital finance side? Maybe walk us a little bit through the steps towards entering the wonderful world of venture capital.
I would say accidentally more than intentionally. So I actually originally started my career in sales engineering and working at different technology companies. One of my first very early jobs about 10 years ago, maybe I think it was like my third job. I was working for this French open source middleware ETL sort of data integration vendor called Talend, which eventually went public, and I worked there for a couple of years. That's kind of what got me interested in this open source world, and it was a business that commercialized and is a very large successful enterprise software company that built a business around an open source data integration middleware tool. And learned a lot about the company there. I worked for a couple of fully proprietary sort of software companies after that. But the last 5 or 6 years, I kind of got lucky enough to stumble into learning about Kubernetes early on. I was an early consultant at Mesosphere, the company behind Apache Mesos. And when Kubernetes came out, it was very clearly an exciting project on lots of levels, and I was lucky enough to help start and build the sort of the first Kubernetes startup company, support and services and some tooling. As part of that, I started this conference behind Kubernetes called KubeCon, which is kind of the Kubernetes conference, and was sort of super lucky to meet lots of really amazing people through that experience. The CNCF, which is the Cloud Native Computing Foundation, formed as the sort of foundation for Kubernetes once Kubernetes was donated to that foundation. It's part of the Linux Foundation, and KubeCon was also donated to that. Kismatic was acquired by Apprenda in New York. Apprenda is kind of like Heroku platform as a service, originally focused on .NET Windows Server applications, and they were heavily kind of shifting the company towards Kubernetes. So I was part of that and helped drive a lot of that stuff there. After that, I worked as an EIR at a storage company, actually up in Seattle, called Quantum, and helped with an early Ceph, which is a sort of distributed object block file storage system, widely used open source project framework. And that project was called Rook, and Rook eventually formed the basis for a company called Upbound. That I help advise and helped with a bit. And then after that, I actually started working on another company And OSS Capital sort of evolved accidentally, for lack of a better story and framing. I really just started. So I've always kind of been like intellectually obsessed and curious about the intersection of open source software and commercialization dynamics and sort of business building, product building, since kind of Talon days. But the last, naturally the last 5 or 6 years has been like very intensely focused on this. But I sort of came to the conclusion that primarily because of all of the sort of economic outcome activity through 2018, IPO, M&A, and private equity outcomes, through the rest of 2018, sort of totaling around $70 billion. Half of it was Red Hat. That the sort of the tides were sort of shifting and turning in a big way in terms of commercial open source software companies actually being a real sort of understood category. And then in addition to that, the venture sort of landscape, obviously having invested heavily in this, but not really with a lot of clarity, but more tangentially, sort of opportunistically, kind of gave rise to the opportunity to build something that was exclusively focused on this. And I've always felt very unqualified for doing things that are a little crazy and sort of like this, but no one was really doing it, and I thought it was a pretty obvious thing that should be tried. And so started kind of scratching at that a little bit. I started actually blogging about some of the observations from this sort of like S&P 500 inspired index of large and successful commercial open source software companies of the last 10 years that have reached large, sort of revenues, like 100 million minimum revenue thresholds. And this index has kind of grown from 3 or 4 companies about 6 years ago to now it's 40 companies, and it's sort of been growing pretty rapidly every year.
Let's dig a little bit into this index, which I checked out. It's really interesting. I think it was at six companies 5 years ago or something, and now it's at almost 40. So the criteria for choosing these companies is that they are all in the commercial open source software space. And so let's maybe take a step back and look at what this actually entails. And I mean, the question comes up, is Google maybe a COSS because they're relying on Linux? Or is Amazon because they're basically repackaging all these open source software, Redis, Hadoop, MySQL, because they're basically as a cloud provider repackaging it? Are they also falling under this category? And what's really like the definition?
I'll take a step back and unpack the definition that sort of I've been proposing and talking about for a long time behind commercial open source software company, the sort of COSS, COSS acronym, and sort of what I view as a fundamentally new, different kind of category that hasn't really been studied and treated with scrutiny and clarity in the past, beyond sort of passive, that's an open source company or something kind of less critical. What I would say about the definition for commercial open source software is pretty simple. It's really not super complicated, and this might be slightly academic, but the definition is if the company fundamentally exists because of the open source software project existing, tautologically, then the company is definitionally a commercial open source software company, and that's it. This is independent of the business model. It's independent of the technology. It's independent of license model, everything. So, for example, MapR, Hortonworks, Cloudera, as companies would not exist without Hadoop. GitHub, GitLab would not exist without Git. Red Hat would not exist without Linux. HashiCorp would not exist without Vagrant initially, but over time they created a few projects. HashiCorp is an interesting example because initially the definitional kind of match is typically 1-to-1. So there's one project and one company, potentially many companies. So it's sort of like potentially N to N, but most commonly 1 to N, where there's one project and many companies. But it gets a little bit more multidimensional there in some cases. However, that is the sort of complete kind of definition of commercial open source software company, COSS company. So a COSS company fundamentally exists because a given open source software project exists, and over time the company builds a stack of products and differentiated services and hosted offerings or IP or what have you around that open source software project, and derives business value from that in terms of commercial services and revenue and product and so on.
Yeah, it's interesting because if you think about like Google being built on Linux, there you of course you have like an internal logic of obviously the page rank initially, and then like 7 different products basically being built with their own different business model, and so I think it makes a lot of sense that you say instead of focusing on the business model, you basically focus on this core open source community. So
I'll actually unpack it a little bit more, and I do also think it is independent of community. So to sort of respond to the examples you listed, Facebook, Google, and so on, I don't categorize those companies as commercial open source software companies because fundamentally the core runtime, core business logic, core essence of those companies in terms of technology is proprietary. And with a commercial open source software company, the core runtime, the core essence, the core business logic, the core sort of value creation mechanism for the building block of that company is an open source project that is licensed as such. So it's licensed as Apache 2 or MIT or BSD or GPL3 and what have you. This can quickly segue into a licensing discussion, but I think the licensing discussion is a little redundant. One simple way of thinking about this, and this is kind of something that sort of occurred to me recently, which is probably worthwhile unpacking separately. But with commercial open source software companies, the software that creates the vast majority of the value for that company is decoupled from the company. So the software is decoupled from the company. With a proprietary software company or a proprietary technology company, and you can include Facebook and Google in that category, and probably 99% of all technology companies in that category, the software is tightly coupled to the company. Instead of being decoupled, it's tightly coupled to the company. So that abstraction of the software that creates the vast majority of the value, either being tightly coupled to the company or decoupled from the company, is another way of thinking logically about the difference between a commercial open source software company and a fundamentally proprietary software company or technology company.
Let's drill in a little bit into contributions made to the projects. And so one thing I always wonder about is that in these open source, commercial open source software models, when you look at the Git repositories, you often see that the main contributors are people working at the COSS companies. Of course, there are some, like Segment, for example, which was sort of built around like getting some traction on a particular Git repository, and then of course in the later stage, like Redis is the great example where you have thousands of contributors, and where we had the whole, and this is getting us a little bit into this licensing discussion, where we had the Commons clause, which was penned by your portfolio partner Heather Meeker, and there the discussion was basically that AWS was repackaging Redis, and that Amazon wasn't really making a lot of contributions. So what's your take? Like when you look at potential deals, how do you look at like contribution level? Do you look at the Git repositories and you see the number of commits made and by which parties? Is this core part of your due diligence? And how do you view it also in terms of like value contribution in open source ecosystems in general?
This is a really broad set of things
Yeah,
that
sorry.
I talk about for a long time, but I'll try and give you. I understand the essence of your question. So um, we definitely value a relationship between the company and the open source project as one where the company is regarded as a high concentration and sort of center of gravity in terms of influence, um, uh, valuable contribution, and sort of trusted, roadmap quality, engineering quality, and so on. And there's lots of dimensions to that. That does not mean that the company is sort of monopolistically controlling the entire open source project. It could mean that. That's not necessarily a bad thing. But for projects where there is no single company able to really have a significant degree of influence or you could say control or centralization around some important dimensions, it is far less likely that a given company could actually successfully commercialize that project. And so, for example, there are a couple exceptions to that. So DataStax's founders, the company behind Apache Cassandra, were just really active community participants in the Cassandra project early on. They helped people understand the technology and learn about the project and adopt it in enterprise environments. This is new kind of NoSQL database, and so it's complicated technology to run in production and so on. And they were actually able to build so much goodwill and influence and credibility in that Cassandra community without actually forming the company with any of the creators of Cassandra or the authors of Cassandra to actually build a large successful business over time, which is what they've done. And companies in our index and will likely have a strong outcome in terms of either an IPO or some type of large M&A event or something. They're sort of just at that stage. And this is pretty clearly visible from the size of the company in terms of the employees, the amount of capital they've raised, and so on. So there are a few exceptions to that. It's not super common, but there are some exceptions. Fastly is actually another example of a recent IPO where the creators of Varnish, which is the project that Fastly is fundamentally built on, do not actually work for Fastly or were not part of the founding team of Fastly. However, Fastly came together by building sort of a differentiated product, building on top of Varnish, and basically going to market with a bit of a different sort of more of an indirect commercialization approach. They actually built a differentiated CDN content delivery network based application and a variety of other things on top of Varnish. And they compete in existing markets against players like Akamai and CloudFront, and also have new products. So, but these relationships get a little bit context specific. In general, though, I think you're right. We definitely pay very close attention to the relationship between the company and the project on lots of dimensions.
Yeah, so maybe let's look at the Redis example a little bit more, where you had Redis Labs basically being the monetization layer. And I think you often mentioned this tweet by Doug Cutting, where he said that it's insane basically to think that the contributions made to the project will always equal to the value derived from the project. And here, like in Redis, we have sort of this situation with Amazon, and this question came up in the community whether or not to limit basically the way in which use of the software can be made. So what's your that's basically a three-party scenario where you have sort of the open source project, then the monetization company, and then a third player coming in. So what's your thinking around this tripartite dynamic, if you like?
That's interesting, tripartite. I haven't actually thought of framing it that way. I would say it's multipartite, and where multi could be n degrees of complexity instead of just three. So going back to what I was mentioning around the decoupling of the software from the company, so now you have these two independent variables. When you decouple the project from the company, and the project is the source of the vast majority of value creation, exponentially more than the company can create independent of the project, because it's just the company, the shell. what occurs is this sort of meritocratic capitalism phenomena, and this is not a new idea, and I'm not a sort of deeply studied economist, but if you were to frame it in terms of comparatively describing the traditional fundamentally proprietary technology software company model as being one of monopolistic capitalism, and with commercial open source software, that model being one of meritocratic capitalism. When you decouple the software from the company, you have many constituents capturing value and commercializing around that core project. What is unique and nuanced and interesting and worth noting about open source software, though, when you have a successful project and ecosystem, is that there is a very uneven distribution between the value capture constituents around the project, and those value capture constituents are multifaceted as well. So, like, for example, the developer ecosystem that uses an open source project is actually capturing value, given that they increase their skill level and their job transferability and their marketability. And Kubernetes is one of the hottest, most valued deep technical skills now in infrastructure software and DevOps and systems engineering. And so if you're a deeply skilled engineering resource that is super knowledgeable in running Kubernetes and contributing to it and so on, like your sort of marketability and your job prospects go up by probably a factor of 3 or 4 or 5 or something. I don't know really what it would be, but this is a super big supply-demand problem right now in the Kubernetes ecosystem. Everyone's hiring Kubernetes experts, and there aren't enough of them. So that's one constituent that captures the value around an open source project that isn't a commercial entity, and that's not something that traditional economics measures. Traditional economics measures value capture constituents only as commercial entities or shareholders, and I think that's a big flaw in the system. Now, with the commercial entities that do capture value around an open source project, like cloud providers, commercial vendors, product companies, companies in industry like banks, retail, pharma, insurance, and so on. Those entities or constituents capture value in different ways that actually serve to increase the overall usefulness and an effect of sort of meritocratic capitalism across all of the other constituents, not uniformly, but sort of in a rising tide kind of way. And so what I guess you could sort of look at with commercial open source software from an economics lens is that it should actually almost be encouraged. In fact, I very strongly believe that it should be encouraged and promoted and explicitly recognized that the fundamental economic model, because it is one of meritocratic capitalism, actually serves to benefit all value capture constituents when that model is embraced. Because obviously, if you build a better, differentiated, more compelling offering, you are in a position to capture a meaningful enough percentage of the value created of that project to actually build a huge business. And so I'll give you an example of one case where say Elasticsearch as a project is used by millions of people. The company behind Elasticsearch is a $5+ billion publicly traded software company, or commercial open source software company, as I would call them. And you also have many cloud providers taking Elasticsearch and commercializing that code base as a service because the project is open source. That's actually a good thing in my mind, because it serves to increase the credibility of the project through the distribution channel and customer base and credibility of cloud provider platforms, which are very significant and have benefited from the tens of billions in infrastructure investment and innovation that cloud providers have brought on and delivered to the world over the last decade. And it also serves to increase the level of quality in the code base itself of the project, even if cloud providers or these large vendors don't explicitly contribute back to the project proportional to the value that they capture, which goes back to the Doug Cutting tweet that you mentioned, which I sort of paraphrase a lot, but Doug says that it's insane to expect value contribution back to a project proportional to value received or value captured, because they're two dramatically different dimensions. The value creation often dwarfs value capture, and in most cases, 99% of the time, in my opinion, for successful projects, value creation is orders of magnitude more than value capture for really any constituent, except perhaps for the entire developer stratosphere and ecosystem. If you look at commercial constituents that capture value, I would say that it's probably bound by maybe very low single-digit percentage points of value created. So you could have a commercial open source software vendor capture 1 or 2% of the value and become a 10, 20, 30, $50 billion company, and a cloud provider capture 1 or 2% of the value and build a $10+ billion service. Both those things can happen harmoniously. Both those things serve to drive the project ecosystem, the community forward, and both businesses can actually build large, profitable platforms that can continue to sustain their endeavors.
Yes, I think it makes a lot of sense to think about, and I think it's something that's been sort of lost in this whole Redis discussion, that having the cloud providers involved is actually a way of getting distribution for these open source software projects. So let's talk a little bit about the different models, and you've in a blog post of you've sort of and also in the spreadsheet that you keep up, you distinguish between I think it's 3 broad categories: the open core model, then the full open, the SLA. Maybe just talk a little bit about how you think about different business models. About there's a lot of variance, but the kind of categories that you use as your mental models when thinking about these projects. Yeah.
Sure. Yeah. So there are a handful of business models that COSS, commercial open source software companies, implement. And before I actually dig into those different business models, it's actually worthwhile mentioning the different types of models and the sort of like differences between high-level models overall, independent of business models. So if you could start at the top level with the company category, the sort of category of company, which is the commercial open source software company. Within that, you have business models, and then in addition to that, you have license models, and in addition to that, you have distribution models. So these are all like independent of each other. One of the things that I think we see a lot in the industry is kind of conflation of a lot of those models, and I think that in most cases can kind of be a mistake. So if you sort of think about classifying the company as its own unique, sufficiently complex thing to sort of assess, and separating out a definition for that serves to sort of more clearly understand business models within that type of company, and then license models and distribution models. So for commercial open source software companies, the most successful to date business model that the large scale companies that we've been tracking and assess use and implement in varying dimensions is this open core approach. And you can think of open core as a business model, but also sort of a way of constructing a product and architecting a company and so on. It's more than just the sort of way the company generates revenue. It has lots of different implications. Another business model that commercial open source software companies implement is one of just pure support services and training and consulting. And this basically is less common among very large successful commercial open source software companies. So what I mean by large successful ones is sort of north of 100 million in revenue. In the history of commercial open source software companies, the last 15 years or so, or really maybe even since Red Hat in the late 90s, there have only been, say, like, I want to say like 5 at most commercial open source software companies that have exceeded 100 million in revenue with a pure support services, training, consulting kind of approach, which in other words means no proprietary IP, no proprietary technology in terms of source code and so on. Open core is essentially the fusion or the integration of the open source project alongside, with, around, underneath a proprietary product of some kind, or proprietary offerings, or hosted service, what have you. And by proprietary, what I mean is the technology is only accessible to customers when the customers pay for that technology somehow. With the open core itself, quite literally, it is open and it is licensed as such. And so anyone, anywhere, would be free to see the source, modify the source, contribute to it in any way, distribute it in any way. And there's a few other dynamics to the sort of the most commonly recognized properties of this open source software definition. That's the sort of general approach that we see the very large, successful, sort of hundreds of millions in revenue plus kind of commercial open source software companies implement, as well as the early stage ones. So you could think of the open core model as one where the company has the core open source project, or in some cases a few or several, and the crust around, or the shell around that open core, where the proprietary software or technology is developed and distributed. And one sort of maybe oversimplified way of thinking about this, if you have sort of one open core and one shell or one crust around it, is the thickness or the thinness of that proprietary sort of shell or crust varies depending on the relationship between the open source project and the degree to which the commercial open source software company can maintain or regulate a level of defensibility and sort of the rate of commoditization, if you will, around that open core. And so this is something that has really just occurred and been true of commercial open source software companies for far more than 10 years now, which is that the most successful large-scale revenue businesses in terms of product revenue in commercial open source software companies occurs when the company is able to regulate and control the rate of commoditization around the open core. So around meaning the shell or the wrapper around the open core. So to give you some concrete examples of this, if a set of features or extensions or wrappers, and there's some common things that companies do, but it really just comes down to really anything that can be differentiating and valuable for a customer. If those things are very easily sort of cannibalized or implemented or built by the open core community and open core project itself, the open source ecosystem, or sort of anyone, the likelihood that the company or the commercial open source software vendor can maintain a differentiated, sustainable, durable business selling a commercial offering or a commercial product to enterprise customers, it basically erodes and it diminishes over time. And so that's kind of one of the things that goes back to the relationship between the company and the open source project. And it doesn't necessarily need to be monopolistic or sort of overly controlling on all dimensions, because each dimension is slightly different. But that's kind of one way of thinking through the open core approach. And for us at OSS Capital, our belief system is that this open core model is one that works really well, and it's certainly not binary. It's not kind of fully understood, and it is fairly subtle and multi-dimensional. And we think it's context specific for each company. And it's actually the main reason we decided to call this upcoming commercial open source software company conference or sort of industry event the Open Core Summit, because this is sort of the one common thing that the sort of commercial open source companies have in common, is commercializing through this open core approach.
Yeah, I mean, I think I'm always surprised that it took venture capital that long to sort of wrap their head around this open core model. I remember that when you had at that time it was I think 100 million Series A by GitHub, by A16Z. Everybody was thinking they're utterly mad. And then of course last year we had this breakout year, 2018, for open source startups or late stage startups, with GitHub of course being acquired, but we had $4 billion exits, with MuleSoft getting acquired, exiting for a second time to Salesforce. And I mean, if I think about like specialized VC funds for open source systems, I mean, some big names come to mind, like Peter Fenton from Benchmark, or A16Z has been quite active. Michael Volpe from Index, but these have all been like part of a much broader portfolio. So I mean, I'm really excited that we now have like a really specialized fund investing only in this space. But what do you think was the reason that it took VCs that long to sort of wrap their head? I mean, I remember the founder of JFrog just saying that when they were raising, so it took them like 4 years to sort of raise the Series A, and then 2 days to raise the Series D, basically. And I think we've now sort of matured in the understanding of the open core model. But what do you think? Why did it take venture capital that long to sort of wrap their head around this new ecosystem?
I think that the proof is always in the pudding, and when you see billion-dollar outcome after billion-dollar outcome, in particular in last year's sort of thread of M&A, IPO, and private equity outcomes across Magento and Elastic and Pivotal and MuleSoft and GitHub, and obviously the funding events like HashiCorp's $100 million round, JFrog's $100 million round, GitLab's $100 million round, and so on. It just starts to become very obvious to kind of everybody up and down the institutional kind of capital supply chain, if you will. I think that Peter Fenton at Benchmark has always been a super smart, sort of active investor ever since making the leap of faith, investing in JBoss, I think 2003, 2004, and I think he's talked about this publicly a couple of times. Definitely one of the more prolific, what I would call commercial open source software company investors of the last 15 years. And Mike Volpe at Index has made some really phenomenal investments in this category. But as you mentioned, at the firm level, we've never seen an exclusive, concentrated, focused thesis where that is literally all the firm does. I think for a few reasons, and I'll say one is, just generally speaking, historically, venture firms have been very multi-thesis, sort of arbitrage, multi-strategy, multi-thesis, kind of multi-concept, because they want to sort of hedge against a new wave or a new transition or trend coming along, and being conflicted out or being restricted from investing in that. I think we've seen a big change over the last few years in that sort of world where there's a lot of specialized firms, there's a lot of specialized funds, and I think abstractly, macro level, there's going to be some really interesting some really interesting evolutions in the really specialized thesis-focused firms over the next 10 years, and we're certainly one. I think there's also going to be continued success from the multi-thesis, sort of thesis-agnostic, if you will, venture firms. You could arguably say, and Andreessen Horowitz is thesis-focused with sort of software eating the world, and going back to Mark Andreessen's seminal piece, but I like to think that open source software is eating software. So, that thesis, I think, evolves a bit. Having said that, of course, Andreessen Horowitz has actually made lots of really smart commercial open source software investments, and they've got great folks over there, in particular like Martin Casado.
Yeah, let's dig a little bit into this seminal software is eating the world thesis of Mark Andreessen, and I think you've made the point before that you sort of see in the COSS space, you sort of see that the open source community has sort of eaten started to sort of chip away at the middleware level, and that as a medium to long term perspective, you see it also moving into the application layer, namely SaaS, CRM, ERP, and maybe at like very far out the consumer application layer. Basically, yeah, having open source Uber at some. There the obviously the values in the data and the network. And so it's going to be a far leap to that. But maybe talk a little bit about this kind of narrative that you've mentioned in some of your blog posts already.
I think there's a lot of nuance to open source eats everything, and open APIs, open interfaces, open data, open networks. A lot of these things are sort of overlappy, intertwined, and somewhat related, but we're particularly passionate about open source, and so I'm not going to make the broad panacea statement that open source truly, sort of eats and replaces every possible, business model and company and technology and so on, for the sort of next several decades. I think that there's ways in which that could materialize from different kind of perspectives, but going back to what you were saying around sort of infrastructure, middleware, SaaS, consumer applications, and sort of that progression, I'll sort of give you one perspective that it's sort of an analogy way of thinking in terms of a very different sort of set of circumstances and sort of things that we saw in the consumer internet world early on, the dot-com bubble, and sort of 15 years later. And I think transferably what we could see with the developer ecosystem, open source, and the sort of disruption at the application layer beyond middleware and IT and dev tools over the next decade. So this takes a little bit to unpack, and I think I tried to blog about this once. I failed. It was like one sentence, but it really requires like 5,000 words or something. So I'll try and give you the description of this. If you remember pets.com from the dot-com bubble, sort of buying pet food on the internet, they were one of the famous sort of like, I don't know, they raised several $100 million. Yeah, big deal. They raised several $100 million. They crashed and burned and imploded, and then they failed. And I think they failed for two primary reasons. The one reason that they failed was that there was a very small, relative to now, number of people on the internet. There's a couple 100 million people on the internet, I think, perhaps less than that. The second reason was it was cost prohibitive to ship, the pet food across the country. So if you wanted to ship, so if you're here in San Francisco and I wanted to ship pet food to you in, wherever you're at, that would be cost prohibitive. Let alone wanting to ship it to Boston or New York even, that's also probably cost prohibitive. Primarily because the logistics and supply chain and sort of shipping infrastructure for heavy packages was not sophisticated enough to make that efficient for the consumer. So those two reasons. Fast forward 15 years or so, and we have Chewy.com, which is the exact same business model as Pets.com. Started at the right time in history, essentially, but now we have several billion people on the internet, so the number of consumers changed. And then the shipping and logistics supply chain infrastructure for heavy packages, costs dropped down dramatically thanks to FedEx and others. Going back to the developer open source world, I think for the application layer, one reason that is very, very sort of easily connected to the pets.com story is for failure is Sugar CRM. So Sugar CRM was actually able to build a reasonably large business, like close to 100 million revenue business or perhaps more. And they were originally a commercial open source based CRM application. And they actually shifted to a proprietary model, and I think they stayed that way, and they were recently acquired by a private equity firm, and it was sort of plateaued out. But what I believe held Sugar CRM back is sort of two primary reasons that are interrelated, very similar to the Pets.com story. So when Sugar CRM was founded, I believe it was about 12, 13 years ago, the number of programmers and developers building open source software was, I'd sort of venture to say, about an order of magnitude less than what it is today. So maybe 3 or 4 million. Right now we have 20 plus million. 30 million if you subscribe to GitHub's numbers, which should be accurate. And I think the resulting sort of effect of that is a significant, it's two dimensions. I think the proximity of software engineers building application level products is so far removed, given that the number of software engineers is, in the sort of low single digit millions, and this is really, people writing business logic for custom applications or glue or trading finance things. They're not building sort of enterprise packaged software category products that can be brought to market across lots of customers and sort of marketed that way. I think the change from when Sugar CRM was founded to now is obviously the number of software engineers building, using, and leveraging open source software as their primary tool for innovating and building and constructing things has grown by an order of magnitude. But I actually believe that number, 20 to 30 million of what it is today, is not high enough for sufficient empathy and proximity to the application layer to actually disintermediate the product founder. And so with SaaS companies, which is the sort of independent software as a service category where you see line of business enterprise applications brought to market, you typically have product business-oriented founders constructing the application architecture and model and workflow, building and bringing together an engineering team to do that. And I think that happens because we don't have enough critical mass of software engineers to basically disintermediate that type of costly process, which requires high levels of empathy for the customer workflow and extremely nuanced understanding of the domain problem. And so my theory, this is a maybe far wild out hypothesis, is that in the next decade or the next 2 decades, if we continue to see the compound annual growth increase of software engineers using open source and contributing to open source that we've seen in the last even 5 years, which is say in between 15 and 20% growing per year, in some years 50+% per year, 50, we will likely have by 2030, 2035, many hundreds of millions of software engineers using open source software and contributing to open source software as they build applications. And the consequence of that growth will be that the empathy levels for implementation of domain-specific line of business enterprise applications just organically by the software engineering community without the need for a deeply domain-specific specialized product person will be vastly higher than we've ever seen in history. And I think that will be a moment in time when, and we're actually starting to already see it at the cracks and edges in certain new application categories, that will be the moment where we'll start to see open source innovation and disruption, but a lot more innovation at the application layer. So far today, especially as is represented in this index that we've been updating for five or so years now, the vast majority of large companies that have been built at the commercial open source software company level have been infrastructure, middleware, sort of developer tool platform level companies. There are a handful of exceptions to that. So there's a company called LifeRay, which is a very large and successful 800+ person, basically portal enterprise SharePoint, essentially alternative, and they also compete with Sitecore, and it's a fully open source project, and they've built a business, an open core business around that. We also have sort of like application categories that are sort of straddling both worlds, which are sort of middleware, infrastructure, and application, things like CMS and e-commerce based frameworks like Magento, Acquia, Automatic. So Automatic is the company behind WordPress, Acquia behind Drupal, Magento behind the Magento e-commerce CMS. And so those are technically application categories, but they're not quite full-fledged CRM, ERP, HRM, sort of like large enterprise application categories that are dominated by companies like SAP and other large, or Oracle and so on. So I think that's my sort of like thinking around the phenomena of open source software eating everything. But the fundamental sort of lever for that is huge increase in the number of software engineers building and relying on and contributing back to open source software.
Yeah, another really interesting example that you brought up recently was the example of Mattermost, which is the open source Slack. And I mean, especially now, shortly before the Slack direct listing IPO, I mean, Slack obviously has a lot of proprietary data on the kind of communication that's going on. They're not monetizing that to the level that they could. So I think one reason why some companies and also open source projects are using Mattermost is really to basically have control of this data, and maybe in anticipation of this monetization, sort of take back control. So talk a little bit about this example and how this fits into this transition that you sort of described earlier.
I'm actually going to compliment my friends over at Andreessen Horowitz and Martin and his colleague for writing a recent post saying that data network effects are sort of overhyped and overvalued. And I think it was actually a really great post. I didn't quite agree with it the first time I read, but I think over time, companies will differentiate on really valuable and frictionless consumer experiences by just iterating toward that and understanding consumer behavior indirectly or directly, without the need for exploiting vast amounts of highly sensitive and private information and data around consumer behavior and activity. And I think that Mattermost, as a commercial open source software competitor to Slack, is fundamentally doing that. They're building a successful open source project that has won over the sort of minds and contribution of many hundreds of developers, and the community and sort of compound benefits that they see from that are pretty significant. Can they grow into as large a company as Slack? I think so. We have yet to sort of see a lot of the late stage effects play out for them. Slack is likely to be a $20 billion company after being public for a while, at least based on current market pricing. And Mattermost is Series A funded company at this point. So it's to be determined, but yeah, I think a lot of this is useful framing, and it's actually great that you brought up Mattermost, because this is one of these early signs of an application level commercial open source software company, and it's sort of in a new application category, in a company actually growing and proving out that model works even now.
So let's talk maybe a little bit about the concrete deals that you've been looking at and the first public deals that you can announce. So I checked out dev.to, which was, I think, your first public, which is basically the way I understand it, is an open source network for open source community members. I made my first post today. I really like the UI. And yeah, I mean, I've personally become a bit frustrated with Medium putting up the paywall. So I'm thinking about posting some things that are specific or relevant maybe to this community to post it on this side. But maybe walk us through like a little bit the decision process and maybe some other deals that you can already announce.
Sure. Yeah, so Dev is one that we were super fortunate and lucky to find and partner with the founders in their first funding round. It was a seed round, and you could think of Dev as a new kind of content distribution platform and social network for initially focused on software engineers and sort of user generated content that is very high empathy toward people who just want to go down a self-learning path and really aren't interested in taking lots of structured courses and going to university and so on. Like, they're really just self-taught, self-motivated geeks or technology people who want to learn how to write code and build applications themselves. And sort of the frustration and friction in something like Stack Overflow, where you're just copying and pasting code snippets and expecting people to sort of fill in the blanks. With Dev in the Dev2 community, what you see is a much more warm, friendly, welcoming kind of environment that really connects with people who all sort of feel this shared sense of explaining the value of explainability and the value of sort of demystifying concepts and breaking things down in an accessible, understandable way. So I guess some concrete examples are like, maybe when something like WebAssembly or GraphQL or Kubernetes or some new technology or new complicated platform or paradigm comes along, instead of sort of saying, oh, go read the docs or go read the code or something, you can go to the dev community and invariably you'll find just like a litany of really valuable, useful blog posts actually in understandable terms breaking down what something does, how you can use it, practical kind of scenarios, and in a sort of simple and friendly way that I think has set the dev community apart, and made it a destination for some really awesome people, and it's been growing really fast. I think partly because the growth of the next generation of software engineers, I think, are primarily going to be self-taught and primarily going to be going through these sort of online resources and tools that are just freely available and at their fingertips, but perhaps are missing this sort of human element of kind of explainability and cohesion that the other platforms miss. It's really interesting that you mentioned just sort of sharing content and publishing things as an alternative to Medium or other proprietary blogging platforms. This is also another really interesting sort of growth factor for the dev community, mostly because their platform is open source and the commercialization is possible in lots of other ways than actually charging directly for content universally across the board and setting up sort of paid tiers and so on. And so yeah, the dev sort of content publication and the whole site infrastructure and CMS and everything is all open source up on GitHub, so you can actually build your own dev for specific purposes. And dev is actively working with enterprise customers and helping them sort of build their own internal dev communities for their own internal software engineering organizations and helping them build platforms to connect internal engineering teams and so on. So it's a really exciting company. We're crazy lucky to have partnered with them. Other companies, we actually did invest in Mattermost as well. We participated in their previous round, and they're doing really well. We talked about Mattermost a little bit. We've invested in a number of other companies. Over time, we'll be announcing a lot of those. I'm a big fan. I can talk about one where I'm a big fan of. This is a little bit more technical. The RISC-V ecosystem is an open source computer architecture that is sort of set up to cause lots of innovation and disruption in the semiconductor industry. So the semiconductor industry is sort of dominated by two computer architectures today: x86 by Intel and ARM by ARM Holdings. And so ARM Holdings is microcontrollers and embedded processors and sort of IoT and sort of mobile devices and so on. And x86 is all server-side infrastructure that primarily is owned and dominated by Intel. RISC-V is an open source computer architecture specification, and there's a huge burgeoning ecosystem of companies growing around that. So we invested in Hex5 Security, which is a security platform built on top of the RISC-V computer architecture, and there's a large ecosystem of companies building really interesting tools and products around that.
Okay, so the last question before we have to wrap up is, Naval often talks about venture capital being sort of advice bundled with money. Not all money is the same green. And so as OSS Capital, I heard you talk about like sort of the value add stack that you as a VC can have, starting with licensing, where you obviously have deep domain access with Heather Meeker, then finance. Maybe walk us a little bit about on the value prop that you have when you're pitching like highly coveted deals in this really hot space.
Sure. How do we differentiate? How do we win over really great teams and founders? Multifaceted, but I'll sort of just stack rank things. Commercial open source software is all we do. We do nothing else. So we're deep domain experts. We have a platform of equity advisory partners. Many of the largest commercial open source software companies and the founders of those companies are in that network, and so we can help with office hours and diligence, and even on our side, deal flow and referrals and so on. Context-specific things with companies like product building and hiring and strategy and so on. We have a partnership which consists of portfolio partners and sort of operational experts and domain experts on different dimensions. So things like finance and legal and product development and ecosystem development and so on. And those partners are much more hands-on and involved in our portfolio and our portfolio companies and also companies we work with to help them build their businesses from early on. And those portfolio partners have helped grow and build many multi-billion-dollar commercial open source software companies from very early on, pre-revenue, all the way up to 100+ million in revenue. Another thing that we have as part of our platform is the Open Core Summit. So Open Core Summit is kind of a vendor-neutral industry event. We're not really kind of tightly coupling OSS Capital to Open Core Summit. The first event is happening in late September. We're hoping to have well north of 1,000 people at that event, and it's kind of the who's who of the largest founders of commercial open source software companies, as well as a large contingent from the investor ecosystem, analysts, aspiring founders, developers, and so on, as well as customers. And sort of you can think of that as the commercial open source software industry ecosystem conference. And that's really kind of a place to learn, understand best practices. And really part of the cementing of this category is that we view and we believe commercial open source software companies are fundamentally different in almost every functional domain. So product, engineering, hiring, business models, finance, and so on, as compared to proprietary software companies or fundamentally proprietary software companies, sufficient to really benefit from deep domain expertise and exclusively focused kind of knowledge in this area. And we're super happy and ecstatic to partner with great firms like Andreessen and Index and Redpoint and others. We're a very early stage focused firm, and we don't have 10 billion under management, so we're just kind of we're less than a year in and we're getting started. But hopefully over time we can add a lot of value and help companies that are excited about this model.
Yeah, thank you so much. Really excited to have you in this ecosystem. A really specialized deep domain expert investing in this space. So maybe how can people find out more about OSS Capital and get in touch with you?
Sure. You can go to our website. It's really simple. It's just oss.capital. And for the Open Core Summit that's coming up at the end of September 19th to 20th in San Francisco, it's just opencoresummit.com. I'm pretty active on Twitter. I'm just async.io on Twitter, and you just put in Joseph Jacks on Twitter. Otherwise, thanks for having me on, Erasmus.
Thanks so much. What a great episode this was. I don't know about you, but I personally learned a ton about open source software companies and how this open core model is really challenging this traditional, fundamentally proprietary software model. So this is it for today. Make sure to tune in next time and make sure to subscribe to my newsletter on sandhillroad.io. Cheers, guys.